And those are also buzzing in today's session after the government permitted use of sugarcane juice, B and C molasses for ethanol production. Vamakshi is joining in with more details. Vamakshi, it's a sweet day, I guess, for sugar stocks.
Well, absolutely. It's a sweet day for sugar stocks indeed. The first notification that came in from the government, they said that they've lifted the restriction and have now allowed ethanol production from cane juice, B heavy molasses and C heavy molasses for ethanol supplier 2024-2025, which means that this will be effective from 1st of November. This is a big relief and a big positive for the sugar industry. And why is that? Because the distillery segment was doing very well until the ethanol policy that came into effect in the Q3 of FY24. Ethanol production also generally receives a better margin profile as compared to sugar sales. So this is definitely a big positive for all these sugar companies. We have Balrampur Chini, Shri Renuka, Dalmia Bharat, Dhampur Sugar, Bajaj Hindustan, Awadh Sugar and Triveni Engineering, and many such names that are in focus today on the back of this development. But there's another notification that came through, that is on the grain-based ethanol manufacturers. The government has permitted the sale of up to 2.3 million tons of rice from Food Corporation of India or FCI. This move is sentimentally positive for Global Spirits, India Glycols as well as Triveni Engineering's grain-based ethanol. But why is it only sentimentally positive? That is because the companies are unlikely to reap any benefit, as the last e-auction price was 31 rupees per kg for rice as compared to an earlier price of 20 per kg. Ethanol from FCI rice also currently is priced at 58.5, while maize-based ethanol is priced much higher at 71.9 per kg. This still renders maize ethanol to be relatively more profitable as compared to FCI rice-based ethanol. So therefore, analysts largely believe, that is, this is coming in from Elara Securities, and they believe that there may not be any financial benefit to the grain-based ethanol manufacturers. Other than that, we also have Praj in focus today, and that is because the company offers end-to-end solutions to set up bioethanol plants. Approximately 10% of global ethanol production market share is what the company has, excluding China, of course. So just to sum it up, positive for sugar companies, neutral for some of the grain-based ethanol manufacturers, and positive for Praj Industries.
All right, Vamakshi, thanks so much for giving us the whole host of stocks which are being impacted by the government's measures, and also how much is the impact on an incremental basis and on a material basis. All right, moving on to the